Unlocking the future of digital payment. Value of acceptance, brought to you by Visa.
Well, talking about digital payments there, well, I just came back a couple over the weekend, though. All through last week, we were at Abidjan, the AFDB, African Development Bank Group. They were having their annual meetings. And of course, everybody is talking about how Africa can connect more closely in payments and all. And of course, one of the areas that could be done is PAPSS, the Pan-African Payment and Settlement System. That's one. And now we have the potential of the cross-border payments, which of course still has a whole lot of hitches still holding it. Even though from there, I learned that PAPSS adoption is increasing on the continent, but maybe there's still more need for enlightenment. Supposed to be in local currencies, publicly launched January 2022 by the African Union, the African Export-Import Bank, that's Afreximbank. They're complementing trading. Now we hear they carry out transactions through deposit banks in different countries on the continent. This is all connects Africa. And what are the potentials of that? So cross-border payment potential is to standardize payment. If we could have that slide, thank you so much. Payment solutions to facilitate international transactions, allow SMEs to grow and engage in global trade. SMEs do not always have to remain as SMEs. And then it's supposed to enable, it's supposed to be a growth enabler. Businesses embrace digital payments to increase footfall, improve customer service, streamlined operations, bridge financial inclusion gaps, trackable financial records, improve their eligibility for formal credits and capital, and also infrastructure and trust remain crucial. So while the adoption is accelerating, gaps in infrastructure and trust still remains, unfortunately, and I guess that's part of what we'll be discussing today. Economic impact at scale. A shift from cash to digital payments could contribute between 1% and 2% boost to Nigeria's GDP annually and reduce the informal economy by up to 13%. Well, let's find out the reality of this now with Senior Manager, Tax Regulatory and People Services Decision at KPMG, Toya Kimborough. Mr. Kimborough, good morning and welcome to the program.
Thank you. Good morning, viewers. Thank you for having me. It's a real pleasure to be here.
Good to have you. So, I mean, we've been hearing about PAPSS, launch 2022. Well, I heard that now they're taking it down to the different countries and working with deposit banks. But from your perspective and your knowledge, how much adoption would you say PAPSS is helping trans or cross-border transactions?
Okay, thank you for that question. So just to give some context, we have 54, or depending on who you ask, maybe 55 countries across Africa. And for the purpose of this conversation, I would aggregate them into two classes. So those that are standalone from a payments perspective, so countries like Nigeria, countries like Congo, and those that are part of a regional collective. So French West Africa, the Southern African Development Commission, and the East African Community. So give or take, there are about 28 countries in those regional ones, and those are connected in their regions from a payments perspective. But for each of the other countries, we are standalone, we are all independent. Our payment systems are not connected. It's very hard to send money across borders, right? If a transaction is generated in dollars, it goes to the US first. Can you imagine that? And then before it comes back to Africa, so pushing up costs. If it's euros, goes to T2, European Central Bank's payment system. Now, PAPSS is solving that problem, because what PAPSS is doing is that it has set up what I'll call a backbone, right? A settlement system to enable Africans send money across countries in their own currencies, right? So sitting here in Nigeria, if I wanted to buy something from, say, Dar es Salaam in Tanzania, all I have to do is go on PAPSS, pay in Naira, and then the merchant in Dar es Salaam gets the payments in their currency. That said, PAPSS is still rolling out. I think they are currently in about 13 or 14 countries, and at present they are onboarding 4 more. That may sound low, but it's not really low. Because, you know, I mentioned there are regional collectives. So in West Africa, there are about 8 countries in the BCAO, that's the central bank for those countries. In Cyrus, there are about 15, 16 countries. And then in East Africa, there are 4, and they are currently onboarding Burundi. So that means that in one fuel swap, once PAPSS connects with the BCAO, connects with Cyrus, and then with the EAPS, across Africa, all of a sudden, we'll be saving millions and millions in transaction cost, and saving a lot of time as well. So yeah, PAPSS is definitely solving our problem of intra-African trade and payments.
But is PAPSS the only solution that we have now?
So to put it like this, the fintechs, of course, are doing great work in that space, and then, of course, the Pan-African groups, so Standard Bank, EcoBank, UBA, Access Bank, within their systems, they're doing a lot of great work. But where PAPSS is unique is that it is actually the back end that PAPSS supports, right? Yes, when the payments are done, there will still be dollars because the final settlement in PAPSS is done in dollars. So to put it like this, whenever we last mile customers, when we do anything, at the back end, there's still a settlement leg that we can think of that as the final value transfer. What PAPSS has done is that PAPSS has set a framework, right, for that value transfer. Previously, it has to be done typically through correspondent banking. So banks send messages to each other through SWIFT, and then later they then move money around. So yes, there are other solutions, but none of them is as far-reaching, and none of them would revolutionize African payments the way PAPSS is promising to. And remember, PAPSS is not actually a last mile. So you and I, in a matter of speaking, we don't really see PAPSS. It's at the back end that backstops. Of course, it's an initiative of the African Export-Import Bank. So they backstop all the value that will pass through PAPSS. So PAPSS, to my mind, just speaking as a neutral observer, seems to be the most far-reaching and what's comparable to the T2 system, Target 2 and Target 2 securities that they have in Europe, and CHAPS in the UK, and maybe FedWire in the US.
And yet, even PAPSS has to deal with insufficient infrastructure on the continent.
Absolutely, absolutely. You know, the payment system is filled with a lot of challenges, but to my mind, it also means lots of opportunities. But yes, some of the infrastructure is our economy is, like you mentioned, very, very cash-driven. Of course, there are a few exceptions. In East Africa, they have the M-Pesa across Kenya and a few other countries, but largely across the continent, it's cash-driven. So infrastructure has to be put in place. Retail payment solution that would help last mile users like you, I, and the viewers at home to actually utilize, to be able to utilize the solution that PAPSS is bringing on ground. Again, African countries, we have 54 countries, right? With different laws, different rules, and there are specific things that need to be present in the country for the payment system to be effective. So rules around finality of settlement, around enforceability of netting orders, and a couple of, interestingly, in Nigeria, we don't have a Payment Systems Act as well. And in fact, it was only when the Investment and Securities Act was enacted, and I was looking at it and I saw some provisions on payments, and I thought to myself, well, if we don't have a Payment Systems Act, at least let's get it through here. So that's something else that needs to be done. Even the legal, if I can use that term, the legal infrastructure, right? The regulatory framework, it's lacking across Africa. It's something that needs to be done. And I'm aware that some work is being done, of course, through the one of the protocols of the African continental free trade agreement, but a lot of work needs to be done. And then just the technical infrastructure as well. And when we're doing some work, I was aware that some of our neighbors in West Africa, and there's this thing called the real-time gross settlement. It's a model that central banks use. And some of our neighbors here in West Africa the central banks don't have RTGSs, right? And then thankfully the World Bank was helping them finance some, but yes, a lot of investment has to be made and infrastructure put in place to make PAPSS effective.
And I guess another area or incentive to PAPSS and any other system, you know, for the continents would be charges, the costs.
Yes. So the truth is, out the gate, the charges and the costs, the transaction costs that PAPSS brings, it's very, very competitive. You know, I sort of touched on the fact that today payments, intra-African payments, is done through correspondent banking. So to give you an example, if I wanted to buy something from a merchant in, say, Johannesburg in South Africa, and I went to a bank in Nigeria, right? Let's assume it's not a bank that had any branch or any connection with South Africa. What would happen is I would give the instruction. The bank would instruct their correspondent bank, sometimes first in London, and then if it's a dollar transaction, then in New York, before it then comes back to Johannesburg, right? So imagine the cost, and each of those legs, there are charges, and then of course the transaction time as well. PAPSS takes all of that out. So with PAPSS, if I wanted to buy something from a merchant in Johannesburg, I'll just go to my bank. My bank would correspond straight with the bank in South Africa. And then, so yes, there are still charges, but compared to the costs and the timing associated with correspondent banking, it's really, 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 really very much efficient. It's much better.
Yeah, I mean, that picture you painted is a sorry state for the continent. I mean, if I want to pay for something in South Africa, and it has to go to New York and go around before it comes back to Africa. No wonder even our aviation is suffering it. Landing charges in Africa is more expensive than landing in a country like Paris and other more developed countries. So obviously this has to be dealt with. But, you know, even after dealing with all of this, one of the competitions we had in Abidjan is the enlightenment and knowledge of it, even among Africans. So sometimes things that are beneficial are in existence, but how many people know about it? Especially when you look at the fact that on the continent, a larger part of the economy is informal.
Absolutely, absolutely. Well, it's a challenge, and I mean, it's some of the unique challenges that we have in Africa. And like the way I like to think about it is that wherever there are challenges, it means that there are opportunities, right? There are just opportunities dressed up as work. But yes, let's give ourselves some grace, right? We are on the path. Thankfully, the team at Afrexim Bank, they've conceptualized this and they've come out with it. And it started only in 2022, like you mentioned. In comparison, Target 2, the first iteration in Europe was 2007. And and it was a successor to the payment system that they had, right? So when they moved to a Euro-wide payment system that was connected by RTGS was 2007. So let's give ourselves grace. I'm aware that the guys at PAPSS are also thinking through innovative solutions. They're putting together something called the African Currency Marketplace. So in addition to payments, there will be sort of a barter system for conglomerates and for businesses who have currencies in one country to translate it to currencies in the other country, because you know many of our currencies are not convertible, right? So instead of first moving to the dollar or the euro, if I had naira in Nigeria, I could then trade it with a merchant in Kenya for shillings, right? So let's give ourselves some grace. It's been 3 years. They've done a lot of work. There are already 14 countries, 4 are currently onboarding: Egypt, Comoros, and 2 others. With time, these things will be resolved, and we'll get there. We'll get to it will be Ururu.
All right, we pray. And then the potential we see is Visa is projecting that a shift from cash to digital payments could contribute about 2% to GDP and also reduce informal economy by up to 13%. What projection do you see? I mean, talking about PAPSS, and from your perspective, I guess we're making some good progress on that. If we could accelerate this, what are some of the potentials that you see concerning this cross-border payment, where mostly PAPSS, but I mean, it's good to also have alternatives?
Yes. So yeah, thank you. So maybe it's just a disclaimer. I'm a lawyer, so maybe numbers are not really my thing. But that's on a slightly light note. But your numbers, to my mind, they may even be understated, because you know what happens with some of these things is that the growth is much more geometric and exponential than arithmetic. So if in Nigeria, for example, the unfortunate cash scarcity that happened about 2 years ago actually moved a large chunk of our population, moved some of the unbanked people. And if the plans and the strategies that have been set up by the Central Bank of Nigeria work, the knockdown effects on the economy might be much higher than this. And just to mention, PAPSS is a backbone, right? PAPSS is, so what PAPSS does is, we can think of it like a framework that gives opportunity to many entrepreneurs and to many opportunity-seeking people to create solutions off the backbone that PAPSS has created. In fact, I was teasing one of my friends today, saying that thinking about PAPSS is like a jet engine in a 1996 Toyota Corolla. The jet engine is working well, but the body is still quite, it's not what it should be. But we'll get there. And I'm sure that PAPSS would even give us way more benefits than the numbers that you've highlighted.
All right, let's stay optimistic and hope that, you know, the things that divide us on the continent will not disrupt the growth of PAPSS and cross-border payment. Thank you so much for your time and your optimism, you know, to the conversation. Toya Kimbero, Senior Manager, Tax Regulatory and People Services Division at KPMG.
Unlocking the future of digital payment. Value of acceptance, brought to you by Visa.